I think it's funny because the last round we raised was 486 million euro, so a pretty large amount. And the first round we raised was 1.6 million euro. And the level of stress and the level of uncertainty was not much higher for the last round versus, the first round.
Hello, everyone, and welcome to Fintech Leaders, a weekly podcast where we learn from today's global leaders in fintech business and beyond. Coming to you from New York City, I'm your host, Miguel Armaza, and I'm a co-founder of Gilgamesh Ventures, a venture capital firm that backs early-stage fintech entrepreneurs in the US, Canada, and Latin America. If you enjoyed this conversation, I encourage you to share it and please leave a review on Apple Podcasts, Spotify, or wherever you get your shows so more people can learn about fintech leaders. Today, we have a very special episode. I sit down with Alex Prot, CEO and co-founder of Qonto, one of the largest fintechs in Europe that helps small and mid-sized businesses simplify their everyday banking and offers a wide range of digital financial services. Founded in 2017, Qonto now serves over 350,000 clients in France, Italy, Spain, and Germany, and has raised close to $700 million from Valar, DST, Hedosophia, Inside, KKR, and many more. In this episode, we discuss why focusing on three key areas unlocked Qonto's success and what were those areas, challenges of scaling Qonto to over 1,000 employees and more than 350,000 customers, and how they plan to reach over 1 million clients, the power of having a strong co-founder, fundraising lessons, Europe's fascinating fintech opportunity, and just a lot more. Alex, welcome to Fintech Leaders. How's it going today? Where are you calling us from?
Great. I'm calling from my office in Paris. You can see a bit of the Paris roofs and sky here.
Nice. Well, calling you from New York City, but I do love Paris. So next time I'm around, I'll let you know. Alex, let's just jump right into it. Your story and Qonto's story is quite interesting. But before we get into Qonto, maybe tell us about you, right? Tell us, about your background. Did you ever envision yourself becoming an entrepreneur?
Well, I initially started at, let's say, very other end of the spectrum, meaning that I was, after my business school, I went to investment banking, consulting, so not the most, let's say, entrepreneurial roles or jobs, but very nice experiences to learn about lots of industries, learn from, great people in a very international environment. I worked for a couple of years at McKinsey after, graduating from business school in France. Then I went for my MBA in Singapore at INSEAD, met also some very, international, diverse, crowd. And at INSEAD also met quite a lot of people who were entrepreneurs or were thinking of starting their companies. And that I also already had that in mind, but that also kind of pushed me to think of that even more. And so after that, I started having one foot, let's say, in the entrepreneurial world, worked for about 18 months with Rocket Internet, one of the European, quite famous investors, incubator, where when I launched a company similar to Airbnb in Europe that was called Wimdu. At the time, I started and I managed the team here in France. We had about 30 to 40 people. And then so I had to hire, those 40 people. And then kind of as a first-time manager, it was, of course, a great experience. Did that for about a year and a half. And then I thought I wanted to have the second foot in that entrepreneurial world and really be an entrepreneur, not just, an employee in a tech environment, let's say. And I went to a birthday party and I kind of bumped into Steve, my co-founder at Qonto, who I had known from the days in high school. So we've known each other for now maybe 20 or 25 years now. And so at that birthday party, I told him, hey, what's up? I'm thinking of starting my company. well, what's you on your end? And he said, oh, that's funny. I was at Groupon, but I'm thinking of leaving Groupon to also start my company in the next few months. And that was, a birthday party with, music and so on. So it was not the best place to talk about, these business ideas. So we said, oh, well, let's have a coffee or lunch in the next few days. And we had, that coffee or lunch and then another coffee or lunch a couple of days later. And at the very beginning, we thought of, helping each other refine each of our ideas. And after a couple of weeks, we said, well, why don't we try to do something together? And so that was in 2013, so exactly 10 years ago. And actually, the first thing we did together was a company called Smoke.io. As the name can suggest, it was around vaping and around smart electronic cigarettes that was basically connected to a smartphone. And it was very similar to a Fitbit or Jawbone or this kind of, connected products that help you for your, physical activity or training. And with Smoke.io, we wanted to have a smart coach for smoking cessation. And so we did that for about 2 years. In 2015, end of 2015, beginning of 2016, the company was acquired by a Fortune 500 company. We were happy and lucky to make a bit of money with that exit. And so we quickly said, okay, that was a very nice adventure, but we want to do something, bigger. Also, we're very happy to work again together with Steve. And so we created Qonto. And the very reason we created Qonto is precisely because we had suffered ourselves the pain of, dealing with traditional banks, traditional accounting software, and the traditional way, let's say, of managing, business finances. And so with Qonto, we've really built, a solution by entrepreneur for entrepreneurs, and designing the different features and services we would have loved to have in the first place when we built our first company together, so Smoke.io. So that's, quick recap of the last couple of years, basically.
Love it. You mentioned that your co-founder's former company, Groupon, of course, a great alumni base of entrepreneurs coming out of Groupon. And then for you, Rocket Internet, also like amazing alumni base. What was it about like Rocket Internet that really sparked so much innovation? Just thinking of your experience.
I think Rocket Internet was very much a great catalyzer in Europe, especially of taking some profiles, and I'm a very good example of it, taking some profiles out of the, let's say, traditional investment banking and consulting, backgrounds, and showing them that there was another way, let's say, or there were like other options. And so, taking these profiles or these people that were, hardworking, usually, smart and really willing to, or let's say, okay to work hard, but, instead of working hard in a consulting environment or investment banking environment, going or helping them to move to the tech and entrepreneurial environments. And the way they've done that is really to invest in teams where, they would give them the idea, they would give them the funds, and they would give them a salary, and they would say, okay, you get, 5-10% of the company, whatever the person, but like, of course, not exactly as a founder that we would start from scratch. But the flip side of that is you would also get a salary. So like in terms of, risk reward is kind of halfway in a way between, being an employee and being a full entrepreneur. That's why I was saying earlier, putting one first foot into the entrepreneurial world. And I think they've helped the transition from, let's say, quite risk averse, environment to, very risk taking environment, which is entrepreneurship, by, helping that transition. And they've done that, across Europe, very much starting in Berlin, where Rocket Internet was based. But this really happened in France, in Italy, in, mainly in those markets. And also they did, similar stuff in Africa with Jumia. And so they've really evangelized, becoming an entrepreneur. And they didn't do it, alone. And I think in France, there were lots of other things help. Also the French tech and like the government measures to boost, tech and startups overall. So there are different things happening at the same time. But I think Rocket Internet really helped on that front. And of course, also some other, usually American tech companies spreading in Europe also helped. So Groupon, as you were mentioning, was, where Steve spent some time, but, all the very successful tech companies from the last, 10, 15 years, like Airbnb and other, really also did that. Quite a lot of people that spent some time at Airbnb, then, saw the marketplace model and sort of, I'm going to do the Airbnb for, something else. That also happened quite a lot everywhere in the world, but also very much in Europe and in France.
Let's talk about Qonto, Alex. So you mentioned you decided to build a company by entrepreneurs for entrepreneurs. So has your original vision for Qonto adjusted or shifted now, 8 years or so down the line, or is it pretty similar to what you had in mind?
Yeah, I may disappoint you, but it's very similar to what we had in mind. So we haven't really pivoted or adjusted too much the idea or the business. It's usually a bit scary, even when I take the first slide deck we had probably 6-7 years ago, and what we have today in terms of products, features, pricing. It's very, very aligned. Of course, some things have changed, but it's still very aligned with the initial vision we had. And yeah, and I think it's very much linked to the fact that we really started from the pains we had ourselves. And unfortunately, let's say for small businesses, our pains are very widespread across, small and medium businesses in Europe. So, dealing with product that is not really working well, or support that is not really picking up on the weekends, integrations with other tools like accounting tools, accounting services that are not really, working properly. All these things that we experienced, 6-7 years ago are still very much true across Europe. And so that pain was, definitely there 7 years ago. It's still here with the traditional financial services. And that's why we're, growing very nicely across Europe.
So how do you define a small and medium-sized enterprise? Because we can be talking about just a single person enterprise to much larger companies. How do you guys look at that universe?
Yeah, that's a good question. So the, let's say, theoretical or the technical definition of a small and medium business in Europe is between 1 and 249 employees or 250. And so we're really targeting that whole range. We initially started with the smaller ones just because they usually need, simpler products. So when you get started, it's easier to get, to focus on the simple service. But the very nice thing is that we've been growing with our clients. So we have a lot of clients that started, 3, 4, 5 years ago. They had maybe 2 or 3 employees, maybe 2 or 3 founders. And then they started hiring, employees, and they said, oh, it's great. Qonto is great for 3, but when I have 10 employees, I would need a manager level or manager, custom permission. And so we added that. Or Qonto is great for that integration, but now I need an integration with this other accounting software, which is usually used by larger companies. And so we've built also the product for our clients that we're growing. And so that's also how we've been able to now address, that whole range. You can also see that in our price plans. When we launched, we only had one price plan, like €9 a month. And now we have 6 price plans up until €249. So obviously for larger teams, larger companies. And so we really have clients in all these segments, also across all industries, where we started very much, with some startups, tech companies. For instance, in Paris, there's this huge incubator called Station F. Probably 25 or 30% of Station F startups are Qonto clients. So of course, we're very represented there, but we also have a lot of, clients in traditional industries like construction industry, transportation. I mean, we have 350,000 clients now, and unfortunately, there are not 350,000 startups in Europe. So yeah, we definitely are, much more mainstream now than only the business banking for startups, basically.
So it's interesting because oftentimes when you talk to a fintech company, they are addressing, of course, the long tail of customers that maybe the large incumbents are not addressing. But the question is always, how do you keep them as those customers graduate in size? And for you, it's been by building the features and products that they need as they grow. What are the most popular features today that your customers use?
So the base, which is around current accounts, transfers, cards, direct debits, and so on, is really used by everyone or almost everyone. And then depending on the size and also on the industry and some other characteristic, but usually for the smaller ones, they're very much using also the invoicing tool and a few things around invoicing. So being able to issue invoices nicely, send them to your clients, get paid very easily. That's very popular. And the second example is for larger teams, all tools around expenses management or spend management, giving the right cards, the right tools, the right limits, the right controls for your teams, depending on, whether you're a manager, you're an employee, whether you're traveling a lot or not, whether you're like an employee and in the office and you just need a virtual card, for instance, or whether you're on the ground and need a physical card. So that's, team expenses management parts is by definition very popular with larger companies. And so these are the types of features that are very much used. And then last example is around accounting integrations. That's or accounting, bookkeeping and accounting integrations. That's important for everyone because actually all companies, whatever the size, need to work on these things. But the type of integrations, the type of features needed is a bit different. If you're like a very small business, usually you may want to just, synchronize with the API to your bookkeeping or accounting software. If you have a larger team or a larger company, you may want to have your accountant have a read-only access to your account, so we can do that very easily on Qonto, or have some more sophisticated labeling options for each transaction, depending on what category it is, what employee it is, what type of spend it is. So it's very granular. You can either have like everything, let's say, automatic. If you're like a small company, if you have a larger company, you want to have more customized stuff, you can also do that. It takes a bit of time to set up, but usually in the larger teams, you have a finance team that is actually looking for this kind of customization level.
It sounds like you've taken the product-led growth approach. Would you say that that's accurate?
Yeah, that's very accurate. Almost 100% of our, acquisition is inbound. So, and 80, 90% of those clients who open an account with us do not talk to anyone before opening the account. So it's very much indeed linked to the product, to the features. Of course, we do some, CRM. And if you, try to sign up and then you leave, of course, you'll get a follow-up email and so on. But it's very much product-led growth. And we have a small part of the growth, which is sales-led, and which is more, in a way, even an option for clients. Either you land on our website and you want to do everything yourself, and you can definitely do it. Or if you have questions or if you want to help, for your onboarding or setting up your account or whatever, you can request basically a meeting with our key account managers, and they'll be, of course, super happy to help you. But indeed, most of our growth so far has been product led, and I don't see any reason why this would change dramatically in the next few years.
What happens often, and I'm sure you've seen it, is there's a company like Qonto that's very innovative and is challenging the market. And that puts pressure on incumbents to also try to step up their game. How have you seen the market react, especially as it comes to incumbents? And do you think that Qonto's features have elevated the market as a whole?
Yes. I mean, fortunately or unfortunately, yes. Meaning that I think at the beginning, like probably 5-6 years ago, incumbents were, ignoring us. And then when you grow and clients start really being very positive about the product. And now you see, on Trustpilot or on the app stores, thousands of positive reviews, or 4.7, 4.8 star, reviews for Qonto on these app stores and so on, much, much higher than a lot of incumbents. I think that's, of course, definitely impacting, what traditional financial services are doing, which is good because it's, it pulls the market upwards. And of course, it's also a good reminder for us that, we need to keep on improving the service, adding new features and making life even easier for all these SMEs that we're serving. But definitely we're starting to see some impacts of what we're doing for other, let's say, more traditional companies.
So Qonto started in France only, is that correct?
Yeah, we started in France. We launched in 2017, so 5.5 years ago, because we launched in July 2017. When we launched, we already had the idea that we would very quickly expand across Europe. So just to give you one idea, we launched by already having a bilingual service, French and English. Even though 99% of our clients were French and were speaking French, we were already offering English just to be ready to further, expand and localize in the other languages. And already have the structure in the app and so on. Same, for the website and for the brand, we chose Qonto, like a short name that would work well in the different European languages. And by the way, our domain name initially was qonto.eu for, Europe. And then we moved to qonto.com. But so we started in France, but we really already had in mind to be expanding quickly across Europe. And so about 2 years after launching in France, we launched in Germany, Italy, and Spain. And so we've been active in these markets for 4.5 years. And about 6 months ago, we acquired our German equivalent or competitor called Penta to really go even faster in Germany. And so now we're number one as a challenger, a B2B bank or challenger, B2B business banking service in each of our 4 markets. So France, Italy, Spain, and Germany. And so there's 350,000 clients I was mentioning earlier are indeed in one of these 4 markets.
And how do you manage that? Because each one of these markets is independent, has their own set of regulations and all that. Is that one of your biggest challenges?
Well, interestingly enough, I think that's one of the great benefits of, first, the European Union, and second, the Eurozone. So we often see, and probably even more coming from the US, Europe as a very fragmented or, let's say, complicated, market or region. I think for financial services, the very nice thing is that the license can be, used, can be passported across the European Union. So in our case, we have a French license, a French payment institution license that can be passported automatically. There is no additional process, basically, or almost no additional process to use that license across the European Union. The second thing is that because we're in the Euro area, in our 4 markets, there's, one currency, one payment system, the SEPA network, and so on. So from a technical infrastructure and also regulatory perspective, it's almost like one market. And by comparison, from what I understand, I don't know the market super well, but from what I understand from the US, in the US, it's actually almost the other way around. Theoretically, it's one, it's one country, obviously, but each state has its own regulatory body for financial institutions. So by some aspect, it's even harder to, go from one state to the other in the US than it is for, European financial services. I guess this is a bit exaggerated, but at least for us in Europe, that was very much a nice way to grow within Europe. And that's also why we didn't go to the UK, because Brexit happened, but also because, different currency, different payment system. So it doesn't make it very synergetic to go to the UK for us.
Yeah, I was going to save this question for later, but since we're talking about Europe and then fintech, did you ever, because I know a lot of successful French or European founders in the US, did you ever consider building in the US? Because you've been always in Europe, and then obviously it's worked out. But there was a point in time where there was this notion that if you're an ambitious entrepreneur from Europe, you got to do it in the US. Clearly, that's not the case now. But did you ever consider this?
No, I think there are 2 things. So no, clearly for Qonto, no. But I think there are 2 different aspects which are linked. But let's say the signaling of going to the US and the idea also because there are lots of, a lot of the big investors are in the US and so on. The NASDAQ is the biggest, IPO venue for, for tech in the world. So there are lots of reasons to go to the US that are like very psychological, if I may say. But also a second point is that the US is the biggest market in the world. So in general, depends of course on the product or service, but in general. And so if you're in the, if you're in an industry, like an average industry that's, let's say, evenly distributed across the world, the US is usually the largest market. And so being in the US makes sense just from a market size perspective, an addressable market perspective. In our case, we believe that the market is huge enough in Europe that, we should focus on winning in Europe, being very big in Europe, and that we can build a multi-billion or multi-dozen billion, whatever the number is, like a huge company in Europe, and that we have already so much to do in Europe that we would actually defocus the company by going to other regions, so the US, but even going to, Asia or Africa or LATAM or whatever. So right now our playing field is really Europe, and never say never. So maybe we'll have another chat in a couple of years' time and we'll announce that we go to the US.
Fair enough. And how about the surrounding fintech ecosystem in Paris and in France as a whole? How have you seen it evolve?
Well, I think it's really evolved a lot. I think not only fintech, but tech in general. I think when we started Qonto, so 6-7 years ago, there were 2 unicorns in France. Now they are 28. So that's just one example or one dimension. But for lots of other reasons and aspects, tech has really taken off in France. And now it's not just like, oh, you're working in tech because you don't know what to do, or you're trying to do something, cool or whatever. Like they're really like, there's really a nice ecosystem with, very good people that actually choose to go there, that, start a company or join a company in the tech industry across lots of industries. So, fintech, but also, clean tech, lots of things, where you see also like a very positive impact of tech. Lots of companies have been in the tech industry have been at the forefront of boosting some diversity, equality, and inclusion topics, for instance. And Qonto was one of them. We were part of the first few companies in France that increased the paternity leave duration. That was, I think, 1 or maybe 12 or 18 months ago. And so we're also being much more mature and also taking on our responsibility to build really, let's say, better companies, also for the impact on society and not just for the revenue or EBITDA numbers. And I think that's very much changing on gender balance. Also, we've been, working a lot on that, moving from 34% women to 44% today, aiming at 50% by end of next year. And of course, at the same time, like growing a lot the team. We have more than 1,000 employees today. So we are actually talking about, hundreds of employees to move the needle. And yeah, so I think it's, tech is really becoming an important sector for lots of reasons. Yeah, during the pandemic, as in France, as in any other country, but like the world really moved online, and lots of tools that were used by some people became used by almost everyone. And so you also, could see the benefits of those tools and platforms for, lots of people. So yeah, lots is happening. Last point is that it started also 5-10 years ago when the French government, launched a couple of initiatives to really boost capital inflows into French companies, public support with the, French public bank called BPI France. Also, business-friendly approach for investors. So, and it started before, President Macron was elected. He probably also increased that by being quite welcoming to, international investors in the last couple of years. And Brexit might also have helped a bit because in a way, Brexit probably favored continental Europe a bit over the last couple of years. And so all these things combined really helped having a lot of international investors, but also international talent moving to continental Europe and to France and to Paris especially. So a lot of people that benefited from the French tech visa and that, joined us and at the same time relocated to Paris or to France, which I think is very, very new and great news for us and for the ecosystem in general.
Yeah, last summer, I found myself in a number of tech and fintech events in Paris, and the energy was just amazing. And so a growing ecosystem also comes with a growing funding environment when it comes to venture capital funding. But I imagine it was that VC ecosystem was smaller and slimmer when Qonto got started. Maybe tell us a bit about some of your fundraising lessons and challenges.
Yeah, it's a euphemism. So I think it's funny because the last round we raised was 486 million euro, so a pretty large amount. And the first round we raised was 1.6 million euro. And the level of stress and the level of uncertainty was not much higher for the last round versus, the first round we had. So, of course, lots of things changed in between the company, probably, myself and my co-founder as well, Steve, and the market. But yeah, so to get back to your question, I think the main thing is to be raising money when you are ready and to be clear on, what you're raising money for is the key, and trying to make sure you manage and own the process and the timeline is very key. And I think it's depending on the context, depending on the how sexy your company or business is, it can be, easy or not so easy. But there's definitely a huge difference versus, just taking some calls and saying yes, and, sharing some data and then praying for the investors to come back to you. That happened to us a couple of times. And of course, that's not the best way to raise money. If on the other hand, you want to raise X million euro, this is your plan, and you already know a couple of investors could be interested, and you tell them, look, I'm going to be raising money in April. I want to raise 10 million. I want to work for 6 weeks on, talking with a different number of parties. But at the end of the 6 weeks, I really want to make sure I'll take one of the offers, the best offer, or let's say the most interesting offer, and then move back to, being 100% focused on the operations and on building and growing my business. That's, of course, much better to do that. So you need to know that it's much better, but also you need to have the context and, let's say, the appetite, the investor appetites to make it happen. So it depends a lot on the company, but also on the context and on the investors. So yeah, there's no magic or no super secret thing, but the key is indeed to be able to manage the timeline and the process and not to do what investors would like you to do, basically.
Alex, you mentioned the team is over 1,000 people. I mean, that's a whole army of folks, right?
Yes.
And of course, you've had to learn management lessons along the way. What is the most challenging part of running a company with so many people?
First, what's a bit not that challenging, but a bit sad is that, of course, I don't know everyone anymore. So, sometimes I'm on the lift or in the office and someone says, "Hey, Alex," and, I don't really know who that person is. So it's, that's normal when you have that large of a team, but that's sometimes I feel a bit sad that, and I miss kind of the early days when you know exactly, who is who and so on. But apart from that, well, I think that the tough thing is that my job is also changing very much with that team that's growing. And obviously I've never managed a team of 1,000 people and growing. And so, yeah, it's like constantly trying to find the right people, but also the right processes and the right systems to make sure, the right decisions are taken, the right initiatives are happening, the right, objectives, and everyone is aligned on the objectives, and the communication goes smoothly in the company, top down, bottoms up, but also same level, kind of, between the different functions, different teams, also different countries or markets. Lots of discussions around what should be done centrally, what should be done locally, a bit to your question earlier. And something that works really well, at some point might be not the best option 6, 9, 12 months later. So you constantly need to think a couple of quarters ahead for those tactical changes maybe even a couple of years ahead for some other like strategic things. And so having kind of in your head at the same time, this kind of long-term vision, midterm and short-term, like how do we fix things for tomorrow or after tomorrow? And, kind of zooming in or out on these things can be challenging, but it's also what's super interesting and what's is, very much energizing. So yeah.
No, it's fascinating stuff. And you mentioned that your job is shifting and adjusting all the time, right? You've done this before. You went from a company of, 10, 15 people to a company of 100 and 500 and 1,000, and you've managed to level up. Are there any kind of tools and resources that you found for yourself that have helped you do that? Maybe surround yourself with mentors or anything like that?
So first, we've built that company together with my co-founder, Steve. So I think having a strong, founding team is very key. And I think 2 is a very good number. I don't know. I mean, it's hard for me to say, what would have happened if we're like 3 co-founders or 4 co-founders, but I think 2 is a nice number. And for, solo founders, I think it can be quite tough. So I think that's one key point. And the fact that we've, now been working together with Steve for 10 years, we really know, each other pretty well and have different strengths and different, psychologies, but are very much aligned on, on what we want to do with Qonto and how we, and how we should work together to make that happen. But also we can, challenge each other, give feedback and so on. So that's also helping, I guess, each of us, grow and improve. So that's number 1. I think number 2 is we're also able with that, 1,000 plus team and the nice, money we've raised and so on. We're also able to hire some really great people. So not that the people we started with were not great, but now even more because, we're able to hire great experts in their, in their fields, whether it's, functional, great, finance people, great tech people, great fraud fighting people, whatever, but also great people for, organization, communication around, among the team, business planning, initiatives, how to organize, company OKRs, objective and key results, whatever the topic, we're able to also have, people that master some of these topics around us, which is great. And last point is indeed, let's say outside help or support or ideas. And there, I think discussing with peers, having, the right board members, but also investors among our investors, we have a couple of quite successful entrepreneurs. So whether it's, Taavet Hinrikus, who co-founded Wise, formerly known as TransferWise, or Ingo, who is CFO at ADN. I mean, he actually was CFO at ADN. Now he was just promoted recently to co-CEO position at ADN. Guillaume Pousaz, who is the founder and CEO at Checkouts, is also a Qonto investor. So, around us and with us, we have a couple of very successful fintech, but also entrepreneurs in general. And so having, these discussions with them around what did you do when you have that? How did you approach that problem and so on are very nice, sparring partners to discuss those topics. And it's not like I have, one, very identified key, mentor, but more like having those different conversations around us is helping us, navigate as best as we can.
That's amazing. Alex, before I let you go, last question. And you giving us hints of this, but what's next for Qonto? Because it sounds like there's still a lot left to build.
Yeah, well, a couple of numbers maybe, but 350,000 clients today. Our goal is to get 1 million, SME clients in the next 3 years. Also, turning profitable. That should happen, even before that. But of course, that's quite key, especially with the current environment. But that was also on our minds independently. Probably further expanding across Europe. So, we're present in these 4 markets today: France, Italy, Spain, and Germany. And I think we'll further expand and keeping on growing the best team and a great place to work, learn, grow, and also have some positive impact on society with the different topics I mentioned around, DEI. And so these are really big topics we're putting even more resources and time and bandwidth on. And I mentioned 1,000 employees today, probably doubling the team in the next couple of years. And then we'll see IPO is not a buzzword today as it used to be a couple of years ago, but that might happen to us in a couple of years. We're definitely not in a rush. Now we're really focused on, growing, and we're lucky to have secured that nice Series D about a year ago. So we have the means to keep on, developing the company, making sure we keep on also developing the service and make our, clients even more a fan of Qonto.
Well, Alex, thank you for an inspiring conversation. And I'm sure you've also inspired a lot of fintech founders in Europe and beyond. So thank you. And I'm sure people are going to love this interview.
Thanks, Miguel. Very nice being with you.
Thanks for tuning in, and I hope you enjoyed this great episode with Alex Prot, CEO and co-founder of Qonto. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and means a lot. If you have any suggestions or thoughts about the show, please just drop me a line on Twitter or LinkedIn. Signing off, till next week, I'm your host, Miguel Armaza.